Greetings, everyone. Welcome to the Liberty Call. It is Wednesday, January 25th, 2023. Hope everybody's having a fantastical day out there. It's still cold here in Colorado. It is a balmy 24, according to my computer right now. So, like I said, hope everybody's having a fantastic day out there. It is hump day. And let's go ahead and if it's your first time watching the Liberty Call, please give me some thumbs up, likes, shares, subscribes, follows, all that good stuff. It's important to subscribe and follow because then you get an alert when I go live, and then you can follow along with all the interesting stuff that I talk about in the financial world. So, not a terrible day in the markets. They started off pretty ugly. The Dow was down over 400 points, and it managed to finish in the green by just under 10 points. So pretty much flat for the day. Same with the S&P. NASDAQ was down slightly, and looks like the Chinese markets are still closed for their Chinese New Year. I don't see any new data there on the screen. So let's go ahead and jump into the numbers and see how they turned out today. The Dow Jones, like I said, was barely up 0.03%, closed at 33,743. S&P 500 was flat at down 0.05 points. Closed at 4016. NASDAQ down 0.18, closed at 11,313. Small caps were slightly up 0.17. The VIX was down today, 0.52. It was actually in the green for most of the day. It's currently hovering at 1910. Canada was down 0.15%. Brazil was up 1.13. Mexico was flat. Jumping across the Atlantic, Germany was down 0.08. UK down 0.16. France down 0.09. Euro Stoxx was down 0.12. Netherlands down 0.68, Spain down 0.11, Italy down 0.03, Switzerland down 0.01, and Portugal down 0.68. The overnights, Japan was up 0.35, Australia down 0.3, and New Zealand up 0.33%. So that looks like everything for trading day, January 25th. So not too hot, not too cold, just kind of medium for today. It looked like I said earlier today, it looked like things were going to be much, much worse, but much of those came back significantly from their lows to close pretty flat for the day. So, all right, well, let's go ahead and read through today's market recap. S&P 500 off lows as Microsoft cuts losses, but Alphabet weighs. All right, let's read through a synopsis of this. The S&P 500 moved off lows on Wednesday as investors weighed up a slump in Alphabet against a rebound in Microsoft, despite the latter's mixed quarterly results and underwhelming outlook on growth ahead. Microsoft recovered intraday losses to trade flat after reporting quarterly results that beat on the top line, led by surprise strength in its cloud business, though revenue missed estimates and the company flagged a weaker outlook ahead. Some analysts believe Microsoft's cloud growth could reaccelerate sooner than expected, and the firm's recent efforts to cut costs will begin to boost growth as soon as the fiscal fourth quarter. Meanwhile, Alphabet added to losses from a day earlier, falling 3% after the tech giant cut another 1,800 jobs in California on Wednesday. So seeing a lot more of those articles that, jobs are that there's layoffs here and there. I've had a few calls and notes from clients. It's been affecting them. So, if you're out there and, your company is a bit wobbly, you might want to get your resume updated, or at the same time, just make sure your skills are on par so that if the worst does come to worst, you can move into something else that, hopefully will pay the bills. All righty. Next up on the docket has to do with oil. Oil closes flat as refinery outages counter 16-month high in crude stocks. So let's see what, let's see here. I had a synopsis here and it's disappeared on me. All right, we'll just read through the article here. Oil prices closed flat on Wednesday as unplanned refinery outages face off with crude stockpiles at 16-month highs. New York traded WTI crude for March settled up 2 cents or 0.02 at $80.15 a barrel after session highs of $81.22 and a low of $79.45. U.S. crude benchmark settled down 1.8% on Tuesday after rising nearly 15% over the past 2 weeks on bets of a huge pickup in demand from China. With this month abandoned, COVID-related restrictions had been weighing on energy usage in the world's largest oil importer. London traded Brent for March delivery settled down 1 cent or 0.01% at 86.12 a barrel after session highs of 88.71 and a bottom of 85.42. The global crude benchmark fell 2.3% in the previous session after rallying 11% over the past 2 weeks. U.S. crude stockpiles have risen to their highest in 16 months after unplanned refinery outages led to 6 straight weeks of inventory builds, the EIA said on Wednesday. The EIA said crude stockpiles rose by 533,000 barrels in the most recent week to January 20th, bringing the total builds to 30.3 million since the week ending December 24th. According to the EIA, which serves as a statistical arm of the U.S. Energy Department, total crude stockpiles of 820.1 million barrels as of last week was the highest since September of 2021. A rash of unplanned outages, refinery outages, has led to a pileup of crude on the market, the EIA said. U.S. refineries operated at just 86.1% of their capacity last week versus the above 90% run level typical for this time of year. PBF Energy, a refinery producing diesel in Chalmette, Louisiana, was shut down after a fire on Saturday, with Reuters reporting on Tuesday that the disruption could last at least a month. Boy, that's good for those of us who are buying diesel here and there. So let's see here. Gosh, all my notes are disappeared on me. So, all right, let's see here. Meanwhile, Exxon announced Monday that the performed platform maintenance on several units at its Baytown, Texas petrochemical complex. It's a beautiful part of the world. I've lived not too far from there when I was in Houston. Scheduled maintenance could be lengthier than expected this season, with many U.S. Gulf Coast refineries still running below capacity after a winter storm Elliott disrupted their winter storms. Wow. Disrupted some 1.5 million barrels per day of refining capacity in December. A Suncor refinery in Commerce City, Colorado, has been offline since the storm. Overhauls are also delayed by legacy problems caused by the now 3-year-old coronavirus pandemic, which refiners reportedly plan twice as many overhauls this spring as usual. These disruptions to normal refinery operations have restrained the rally expected in crude prices since the start of the year, with WTI trading just around $80 a barrel versus forecasts of 85 or above. So, all right, on the gasoline inventory front, the EIA reported a build of 1.763 million barrels for the last week. Gasoline inventories have gone up by almost 10 million barrels to date since 2023 began. In the previous week, gasoline build stood at 3.483 million. Automotive fuel gasoline is America's #1 fuel product. With distillate stockpiles, there was a decline of 507,000 barrels for the last week. Distillates, which are refined into heating oil, diesel for trucks, buses, trains, and ships, and jet fuel for jets, have been the strongest component of the U.S. petroleum complex lately in terms of demand. Distillate stockpiles have fallen by more than 4 million barrels since the start of the year. Again, not real good news there. So let's, but you know, it is what it is. So we have to just kind of live with it until we get things back on track. So let me just do something real quick. All right. Well, that's not working today. All right. Next up on the news front, gold hovers near 9-month high. Forecast turns to U.S. data. Gold reversed course to edge up on Wednesday as the dollar weakened and investors kept a close eye on a slew of upcoming U.S. economic data that could influence the Federal Reserve monetary policy next week. Prices had fallen by up to 0.6% earlier in the session. Some corrective price action and profit taking from traders are the reasons the slight pullback earlier today in gold, which, quote, could be argued as being healthy for the uptrend to be extended, end quote, said Jim Wyckoff, senior analyst at Kitco Metals. Gold prices rose to a 9-month high on Tuesday as fears over global recession and hopes around slower rate hikes from the U.S. central bank boosted the allure. The dollar was 0.3% lower on Wednesday, making gold more attractive to holders of foreign currencies. U.S. Commerce Department is expected to unveil its initial advanced fourth quarter GDP estimates on Thursday, which could set the tone for the Fed's January 31st and February 1st policy meeting. U.S. weekly initial jobless claims, new home sales, and durable goods orders are also on the radar for Thursday. Let's see here. Jumping down a little further, quote, gold's run was sparked by a change in sentiment in how quickly the Fed will pause its rate hikes, end quote, along with weakening in crypto exchange FTX and the U.S. dollar, said Rupert Rowling, market analyst at Kinesis Money. Quote, gold will need a fresh catalyst to push it higher than the elevated level it's already at, trading at, end quote. Elsewhere, spot silver rose 0.6% to $23.81 an ounce. Platinum dropped 1.5% to $1,041, while palladium was down 2.7% to $16.96 an ounce. All right, so looks like depending upon what the Fed decides to do, gold could potentially run a little bit higher, which I'm not going to complain about. I am a big fan of the yellow metal. All right, and last up, we have an article here regarding Michael Burry, the guy from the Big Short movie, and my eye is all fogging up on me. All right, title, Big Short, Burry suggests the stock market jump is a mirage. Michael Burry is a historic figure in investing. Many retail investors check his every word on social media and posts in hopes of finding clues to good investment strategy. His stock portfolio is scrutinized to see which companies have confidence and which do not. Addressing some companies that do not, Burry, who runs the hedge fund Scion Asset Management, has shorted their stocks, making bets in the short term that their prices will decline. In times of sharp uncertainty like now, Burry's messages are particularly anticipated. Investors wonder whether a hard landing, a recession is on the horizon, or whether the Federal Reserve can engineer a soft economic landing. Well, I would go with the crash and burn, but you're welcome to be optimistic. In recent weeks, investors have displayed a kind of optimism. They seemed convinced that inflation, one of the biggest problems in 2022, is receding. A newfound optimism in markets translated to a 4.6% rise in the S&P 500 index this year to 4016.95 points as of January 4th. Easing prices for goods and services should encourage central bankers to moderate their aggressive interest rate hikes, many experts say, such as inflection of monetary policies they continue could avoid a hard landing in the economy, except that in that optimism, investors appear to be ignoring some warnings, such as the massive job cuts that are continuing in the tech sector, which eliminated nearly 100,000 jobs last year. This year, tech companies have already cut 58,000 jobs, according to data startup layoffs.fyi, including 12,000 by Google and 10,000 by Microsoft. Burry's tweets what seems a pessimistic parallel, but Burry does not share this optimism. He even seems to suggest that it's a mirage with a very difficult time ahead for markets. The investor, who usually expresses himself in cryptic messages, on January 23rd tweeted a graph of the S&P 500 over a period from September 2000 to the beginning of 2003. Essentially the dot-com bubble and the aftermath of 9/11. He circled the period from September 2001 to April of 2002. During that circled period, the S&P 500 managed to stabilize somewhat after having been in continuous decline from a high on September 1st at 1530 points. Between September 2001 and April of 2002, the S&P 500 managed to rise twice to around 1178 and 1176, but then followed 4 months of decline to a low of 771 points. And then it rebounded to 966 before plunging again. Here's the chart right here that you can see that. I saw this actually last night. One of the Reddit pages I follow follows all his tweets. So there's always a lot of comments in there after he posts something. Burry accompanies his graphic with a single word, maybe. The investor said nothing else, but he appears to be making a parallel with the current period. He later deleted the post, reviving a routine. He stopped deleting posts when Elon Musk took over Twitter on October 27th. Burry's warning is not a huge surprise because at the beginning of the year, the investor predicted that the U.S. economy would fall into recession this year, no matter how you define the word recession. Inflation peaked, Burry wrote on Twitter on January 1st, but it's not the last peak of this cycle. We are likely to see CPI lower, possibly negative in second quarter 2023 and a U.S. recession by any definition, end quote. He then described a vicious circle. The Federal Reserve, which has raised interest rates to a level not seen since the 2008 financial crisis, will pivot and cut rates, while the federal government announced a stimulus package to help households strangled by a deteriorating economy. All this will end with inflation resurging, a circumstance similar to what happened during the COVID-19 pandemic. Basically, we'll see a rehearsal of what happened after March of 2020. Quote, Fed will cut and government will stimulate and we'll have another inflation spike. It's not hard, end quote, Burry wrote. The 2008 financial crisis, one of the biggest financial debacles in history, made Burry a legend. It made him an example to follow in defiance of standard practices in finance. In the 2015 film The Big Short, describes how the investor who had no particular expertise in finance and real estate came to understand that the sector had become a sandcastle. Financiers and bankers had created exotic products based on mortgages given to financially fragile households and borrowers with poor credit. He decided to bet big with the subprime mortgage market would collapse, hence the name The Big Short. History proved him right. The move made Burry something of a Wall Street oracle. He embraced his role, judging by his Twitter handle, which is Cassandra BC. For traders and risk takers, he is a kind of party spoiler. In recent months, Burry had warned that the economic situation was going to deteriorate seriously. The massive layoffs of white-collar workers were on the horizon, and the stock market was going to have a moment of truth. And after 2 years of prosperity during the pandemic, all of these warnings came true in 2022. So, again, he's someone that he just looks at the overall data and makes predictions or guesstimates on what's going to happen. And he's not usually wrong too often. So anyways, that's everything I had for today. If anyone has anything for me, please go to dsafinancialgroup.com. All my contact information's there. And I think that's it. All right. Well, I hope everyone has a fantastical evening, and I'll talk to you again next time. Adios.